Hi, welcome to Market Minute. How about those Buckeyes, huh? Thanks for everybody's support on that. That was a lot of work. So I made an interesting bet. So after they lost to Michigan, I took the 3.7 to 1 odds that they would win the national championship, and by God, it paid off. I don't bet a lot. So animal spirits are driving the rotation in the stock market, and we think that this might continue for a long time. We talked about this a couple weeks ago. We think it's playing out. And so part of the animal spirits, I think the market's getting some visibility that, yeah, potentially we could see maybe $1 trillion cut in spending or more. So that'll bring the 10-year treasury down. We've got a new stock that we like that fits into the rotation theme, the Trump revival of the economy. And then we have some biotechnology updates, really interesting updates. Now, one thing before I started to film this, Trump came on and had an announcement on AI infrastructure spending. One of his guests was Larry Ellison. Larry described, the CEO or the chairman of Oracle. Larry described, what they could use, $500 billion on. That's the funding that they're getting from overseas, but massive amount of funding. They could use that money to solve a lot of the cancer issues or make a cure for cancer. And they described what Grail does, picking up the remnants of the disease early stage in a blood test, and then taking that information and then creating a vaccine. So Grail could probably get bought, over time by maybe Lilly or Moderna. Would fit great in their business models. And to hear Larry Ellison, call out support for this and describe exactly what Grail does, I think the stock could move up quite a bit. Now, market update, animal spirits. So, we can see it in the markets, and we think it can continue for a while. We're seeing the rotation now occurring in, out of companies like Apple into smaller companies with there's more growth rate, and to just the market in general. We're seeing some of the areas of the market that have lagged quite a bit start to pick up because they're economically sensitive, and now they're starting to improve, seeing some better improvement in their business trends. So we like the cyclical stocks, we like blue chip stocks, we like small cap stocks. We don't like Apple. So we discussed Apple a few weeks ago when it was $250 or more. It's now down considerably from that level. We think Apple, as an example, is a source of funds, and it's easy to identify Apple as a source of funds because it's not growing, has a very high multiple. So we think that some of that money will rotate, down in market cap, and other companies as they slow down in the AI space will probably see that money rotate out and to be more, see broader movements of the overall markets. The 10-year Treasury. So it got to 4.8, and then we had the inflation numbers, and then it went from 4.8 to under 4.6. So what happened in those inflation numbers that drove this? It was the housing numbers. The housing inflation starting to moderate. That's what brought the inflation down or is leveling out the inflation. It's still high, but I think the market's starting to see some visibility that the inflation numbers are heading in the right direction. So what's happening with Trump? So, his first day on board, and he's making it happen. So seeing deregulation, that's going to help a lot of different industries in a major way, like the housing area, where there's so much regulation around it. It costs so much more with all the regulation they put in place. And so maybe a lot of those regulations will come off and lower the price of housing. Lower taxes for manufacturers, that's happening. Tariffs, we think that actually will be a positive. So if you put a tariff on a country like China, they're basically out of business, right? Or the business is going to moderate even more from where it is currently. They're going to have a huge stimulus program to get their domestic economy going. So we see countries having to stimulate to offset what they're going to be hit by on tariffs. Iran, we think, is totally screwed, and we'll see that probably here soon. That'll help the U.S. Suppliers of energy, and Russia is heading down the same path if they don't find a solution to what they're doing in Ukraine here real soon. The government, we see a lot of spending cuts from a lot of unused money that are still out there, like the Inflation Reduction Act. We see that unused government spending being eliminated, and a lot of different programs being cut back in a major way, and real estate being sold, and there's a number of different things to get to $1 trillion in cost savings. $1 trillion in savings, that'll really loosen up the expectations of inflation and bring that inflation rate down, and then bring and lower the demand for having to go to the market by the Treasury to get more and more financing. The technicals. So the technicals have broken that mini downtrend we were in. This was really becoming concerning. We bottomed out at the 100-day moving average, so that's a good place to stop. And then had a nice pop on those inflation numbers. And we think the animal spirits coming into the market with Trump winning. So we popped through the 50-day. We think the 50-day is a really important moving average. So as we pop through that 50-day, we really, we got out of our hedges. So we took the hedges away. We have a nice portfolio in place where we can benefit from the market rising, but we had the protection in place as the market turned negative on the year. We wanted to make sure we didn't go down with the overall market if it continued to roll over. The basic industry area, XLB, you can see that it has been in a bear market. Those stocks have been crushed. We like Dow Chemical, but we have another one we're going to talk about in a minute here. But as you can see, the XLB popped above that 20-day moving average, okay? Popped above the 20-day. It's right at the 50-day. We like the setup and how this is directionally going. We think they get a lot of benefit, these stocks, from an improving economy. They've been really been hurt in a big way over the last 3 years by just weak economic policies to the private sector. So I know there's been a lot of government spending, but that hasn't translated into the industrial production of our country. So we see this improving quite a bit. The XBI, this is the small cap biotechnology sector of the market. We think that, you can see here, this is Trump. So this XBI over 4 years roughly went up over 100%. And then I'm not sure what to blame for this, maybe just high valuations, but Biden certainly didn't help things out at all with his policies, the FDA being much more, I think, restrictive to companies and tougher to get a drug approved. And you can see that it corrected all the way back down to almost to where basically when Trump came into office. His policies are good for biotech. So small cap biotechs to us are very attractively valued. We see M&A coming back, large companies needing to acquire their pipeline to refill it. We see J&J as an example being really aggressive on recreating their pipeline. J&J is going to come back into some big growth over the years with what they're doing on recreating the products that they offer. So RSP is the equal weight S&P. It almost hit the 200-day moving average, and it popped very nicely back up quite a bit over the 50-day. So we think that's kind of, for lack of a better word, more leadership of the market. These not mega cap technology names. Certainly, there are some really good mega cap technology names to own still, but you have to probably be much more selective in that. Okay, here's the stock. Here's our new stock. Similar to Dow Chemical, but we think maybe a little bit better positioned. They have very limited exposure to China, They have significant operations in the U.S. They made $8.65 back in 2022. Okay, $8.65. They'll make in 2024 just under a dollar. So 94 cents is the expectation. 2026, as it's starting to come back, we see that they can earn about $6 a share. So putting a normal multiple on this stock of 10, it's $6 a share, gets you around $60 per share target sometime in 2026. So we think over the next, say, 3 years, this stock's going to look like a growth stock in terms of their earnings momentum. And this company's been great on cutting costs and shrinking their shares outstanding. They reduced their shares by 29% over the last 3 years. That's pretty strong. So we think that given where the stock is, it's in the low 30s. You got a doubling of the stock over a couple year period of time, and technically it's set up very nicely. I like how this is set up with the 20-day below the 50, to 50 below the 100, and then the 200-day. You get more and more people coming into this stock as it breaks above these levels and reestablishes an uptrend. So we like this one a lot. Olin. The biotechnology update. We mentioned GRAIL, what's happening there. That's just fascinating. That's one of our core holdings. We think if you own that over a 5-year period, you're going to be really happy. And I think that time frame has maybe been pushed forward with what Larry Ellison's talking about and all the funding that's coming into the sector. Very, very exciting. Anavex. So Anavex was at the JP Morgan conference last week. They had a really good presentation. I thought the CEO did a great job. They talked about the phase 2B data, phase 2B data / 3 data, and then their extension study. So there have been people on this drug now for 4 years, and the data looks great. There's no doubt about it. This drug works. We think it's best in class. So here's the comparative data of Anavex versus Lilly is here in green, and then Biogen is here in the burnt orange. The Anavex data, now this is over for the whole subgroup. They did two different sizes of the drug. The larger size actually worked better, so that's what you want to see. And then it reduced over a 48-week period, so less than a year. It reduced the decline, the cognitive decline that an Alzheimer patient, particularly early stage, experiences. So quite a bit of a difference, really slowing down the decline of the disease. That's the best that the group can do at this point. It's slow the disease down. It can't stop it. But it did a really nice data here, higher than the Lilly data. The Lilly data is, they have two subgroups, but the combined, the important one, the combined group, only did 19% decline in the progression of the cognitive decline. And then you look at Biogen, it's 25.8. So we think that they have best in class. They don't have the side effects that Lilly and Biogen does. It's a very different way of going after the disease. It's not an amyloid plaque eliminator. It doesn't cause ARIA, which is a bleeding of the brain. This is different. So this is basically up front. It prevents the proteins from occurring to cause the cognitive decline in the patient, and it's just a much cleaner way, and it has very little side effects. The major side effects you get is dizziness. So if you take the drug in the morning, you might want to take it at night instead. So have your dizziness while you're sleeping. So we like this one a lot. We think that it could be used in combination with the Lilly drug or the Biogen drug. They work differently. Maybe the two combined actually gives you better efficacy. So we think that these, with the data they put out and the white paper they put out, we think that this will become a very visible acquisition target. Veru, okay, the stock's been going up nicely, so hallelujah, starting to work out well for us. And they have their 2B data coming out any day. Um, maybe that's what's driving it, is maybe the data is kind of slipping out in some manner. We haven't heard anything about the data. Granted, we inquire, but we haven't heard any of the data coming out. But stocks moved up about 100% over the last several weeks. So we think this one can go higher. They've got the holy grail for the obesity space is to preserve that lean muscle mass. So if this data is good, we think the stock's going to go a lot higher. Journey Medical, Derm. Okay, this is a nice little company. We like it a lot. It's kind of back down to about where we bought it. It was about 100% higher from where it currently is. They got their rosacea drug approved a couple months ago. They're going to launch it here at the end of this quarter, likely. The stock's down 50% from its high, and we think that it'll likely move up nicely over time. This drug will do probably a 200 million in annual revenue. So it's a small little niche area of the market, but they have best in class. This is a best in class drug, and the whole category is over $1 billion in size. So we think that they might be able to get 500 million out of this drug, but using kind of the management's expectations of 200 million, you better put a 3 multiple on that. It gets you about $600 million value for that drug over time, and this company already has revenues. They already have a really good built-in sales force. So we see this stock being something that, if you want to be in the biotech space, you don't want to take a lot of risk, this is a really interesting company to own. We think there's a lot of upside potential in it, almost probably 10x upside in this. It's been de-risked because the product's been approved already. So if you have any questions, please ping me. Come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. There's a lot more information on there. And if you ever have any questions, just let me know. If you're interested in using my services, I own PVG Asset Management. We've got some really good managers here, and we specialize in protecting portfolios on the downside. Our biotechnology strategy has been really strong. It's outperformed nicely over the XBI because we're good. We've done that with good stock picking. So if I can ever be of any help, just let us know. Take care.